For TraderInsight.com, I'm Adrian Manzini. It's time for Doc's Daily Dose. Let's take a look at what happened in the war room on August 20th, 2014. So today's Wednesday, and we have got Fed minutes coming out later in the session, and that made for a very slow open. We didn't have any Baltimore chops set up, so no 2 standard deviation openings. We did not have any scalper setups planned for the session, so the only thing we had was the regular trading plan, and none of those hit. So we had nothing going on in RHT. AER did trigger, and that one's just sort of floating around right now in an automated trade. What made for a little bit of interesting trading was the stocks to watch and the stocks and sectors on the radar setups. So let's have a quick look at those and talk about how it is that we manage those trades. Now remember, these never appear on the trading plan results. There is a layer of subjectivity that comes into trading these. These are sort of discretionary trades, and since there's discretion involved, I don't report the results because I don't want to confuse the issue any further for anyone who may or may not already be confused. But let's take a look at how these set up for the morning. Here is Rackspace. First thing you want to look for is this stop level. This is from the trading plan, right? 3267 is labeled the maximum stop on the trading plan in the stocks to watch portion of the setups. And what we see is it opens right around that level, comes down through, never manages to bump up through it again. So as far as I'm concerned, that's a stop that held up. It did honor that level. It did not manage to make a move higher. They opened it higher. It immediately came down through, came back up, retested a couple times, never was able to break through that level. The very next bar, we get an entry at $32.44. So when this one comes down and tags $32.27, that is 50% of the distance to the profit target. So at that point, it's time to ratchet that 32.67 stop down and make the trade risk-free, 32.44. So for a while there, it looked like it might go up and hit 32.44. It did not. It came down, tagged that 50% to target level again, and then made it down 10 cents to the target, which meant we ratcheted the stop from 32.44 down to 32.27, and that's where RAX managed to turn around and stop us out. So not a huge gain there, about 17 cents per share, but that's better than a poke in the eye, and it is definitely a profit that can be booked, and anytime you can book a profit, you should definitely take one, especially if it means you were following your rules, traded by the plan. That is the measure of success that any trader should be using. Next one to look at came from the stocks and sectors on the radar portion of the trading plan. And remember, these discretionary trades are only to be taken with sector confirmation, and preferably with market and sector confirmation. Here we see SWN. This is in the oil and gas group, and if we take a quick look at oil and gas, of course that's identified on your trading plan for you what the sector symbol is. It's XOI. We see this big sell-off first thing in the morning. That corresponds to the move that we saw in SWN, and in fact the 39.64 trigger was the entry price. And then once again, in this case, we made it down 50% of the distance to the target. And it really does not matter that it's a scalp. We still manage them according to the rules, right? You have to have some sort of rule-based component in your trading, or else you are up a creek when it comes time to figuring out what you need to do. It came down, went 10 cents to the target, and then reversed and got us out at 50%. That made for just a quick 12-cent move. We used to call that an eighth of a point. 15 years ago, you would have been happy to sit here and scalp an eighth of a point all day long. Today, everybody wants to see spreads a lot tighter and moves a lot bigger, but sometimes you just take what the market gives you. So those were 2 trades from the more discretionary portion of the trading plan. We don't usually cover these in as much detail as we did today. That's because there is typically a whole lot of other stuff to talk about. Any day of the week, these are good trades to have on screen. They get you in front of more opportunities than would otherwise be the case. On a slow day, they're especially nice since they can give us some opportunities where there otherwise would be none. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day. Have an even better one in store for tomorrow. The best trader education anywhere, only from traderinsight.com.